Stop everything you're doing right now. In the next 11 days, something is about to happen in the silver market that has not happened in over 40 years. While you were sleeping last night, $13.6 billion began draining out of silver futures. Banks are liquidating, hedge funds are panicking. But here is what they are not telling you. This is not a collapse. This is a setup. By January 20th, silver could break $80 and never look back. China knows it. Goldman Sachs knows it. The question is, do you know it? Because what happens in the next 2 weeks will determine who makes generational wealth and who watches from the sidelines. Where are you watching from? Drop your city in the comments right now. Let us get started. January 8th, 2026, a date that will be remembered in precious metals history. Silver dropped 5% in a single session. Traders call it a flash crash. The price went from $83 per ounce all the way down to $74. $6 billion in market value evaporated in hours. Social media exploded. Reddit forums went crazy. YouTube channels started screaming that silver is dead. But here is the truth that nobody is talking about. This was not organic selling. This was not retail investors dumping their positions. This was something much bigger, much more calculated, and much more predictable. This was the Bloomberg Commodity Index annual rebalancing. And it happens every single January like clockwork. Let me explain what this means in simple terms. Think of commodity indexes like giant investment funds that hold baskets of different commodities. Gold, silver, oil, copper, wheat, everything. These indexes have rules. When one commodity performs too well, they have to sell some of it to rebalance the portfolio. When a commodity underperforms, they buy more. Now here's the kicker. In 2025, silver rallied 157%. That is not a typo. 157% in a single year. It was the best performing major commodity on planet Earth. So what happens when you have that kind of explosive rally? The indexes are suddenly holding way too much silver. Their rules force them to sell. How much are they selling? $13.6 billion worth of gold and silver futures combined. The majority of that is silver because silver gained more than gold. This selling started on January 9th and will continue through January 15th. 5 full trading days of relentless mechanical liquidation. This is not a secret. Bloomberg published the rebalancing weights weeks ago. Professional traders knew this was coming. Smart money positioned for it. But retail investors? They are panicking. They are selling at the worst possible time. And that is exactly what creates the opportunity. Right now, as I am recording this, silver is trading at $77.91 per ounce. It bounced off the $74 level yesterday. That $74 zone is absolutely critical. Why? Because that was resistance back in December. Resistance turned support. This is textbook technical analysis. If you look at the chart, silver has been consolidating between $74 and $83 for the past 2 weeks. This is what traders call a bull flag pattern. Sharp move up, tight consolidation, then another explosive move higher. The pattern suggests a breakout is coming. And the target? $90 minimum. Some analysts are calling for $100 by February. But here's what makes January 20th so important. The rebalancing ends on January 15th. That is 5 days from now. After that, the mechanical selling pressure disappears completely. Markets hate uncertainty. Once that overhang is removed, algorithms will flip from sell mode to buy mode instantly. Add in the fact that China starts ramping up silver purchases in late January ahead of Chinese New Year, and you have a perfect storm for a breakout. More on China in a minute, because that is the real story here. Technical indicators are also setting up beautifully. The relative strength index is oversold on the daily chart. The moving average. Convergence-divergence indicator is showing bullish divergence. Volume on the sell-off was lower than volume on the rally, which tells us this is weak hand selling, not strong hands. Professional traders are watching the $80 level like hawks. If silver closes above $80 on any day after January 15th, it is game over for the shorts. We could see a squeeze that makes the 2021 GameStop situation look tiny. And why? Because unlike stocks, physical silver has real supply constraints. Now let us talk about the elephant in the room. China. Goldman Sachs released a report on January 8th titled, "Extreme Silver Price Volatility Likely to Persist in 2026. China Controls Risk." That headline should tell you everything you need to know about who holds the power in this market. China is the largest consumer of silver on planet Earth. They use it for solar panels, electronics, electric vehicle components, and industrial applications. Their demand is not speculation. It is real, physical, industrial demand. And that demand is growing at double-digit rates every single year. Here is what most people do not understand. China does not buy silver the way Western investors do. They do not trade paper futures. They buy physical metal, bars, coins, industrial quantities shipped directly to factories and refineries. When China buys, they drain actual supply from the market. And guess what month Chinese buyers traditionally ramp up purchases? January and February. Why? Chinese New Year falls on January 29th this year. Ahead of the holiday, manufacturers stockpile raw materials, jewelry demand spikes, investment demand increases because silver is considered a lucky gift during the New Year celebrations. Goldman Sachs also noted that China is increasingly controlling the pricing mechanism in silver. The Shanghai Gold Exchange, which also trades silver, is becoming more influential than the COMEX in New York. This shift is happening in real time, and it means price discovery is moving east. HSBC, another major bank, just raised their silver forecast for 2026. They now expect silver to average $68 per ounce this year, up from their previous forecast of $44. That is a 54% increase in their projection. They specifically cited market tightness and Chinese demand as primary factors, but HSBC also warned about volatility in the second half of 2026. They expect a trading range between $58 and $88. Notice that range? Even at the low end, we are talking about $58. Silver is currently $77. That tells you the floor is much higher than most people realize. Here is something that should terrify anyone betting against silver. Physical supply is getting tight. Not might get tight in the future, tight. Tight right now. Today. The London Bullion Market Association, which is the primary wholesale silver market in the world, is seeing inventory drawdowns. Vaults in London that store silver for banks and institutions are reporting lower stock levels than any time in the past 5 years. The Silver Institute released data showing that 2024 saw the second highest supply deficit in the past 20 years. Industrial demand rose 9% year over year. Mining supply only increased 2%. Do the math. When demand grows faster than supply, prices have to rise. It is basic economics. But here's the crazy part. Despite record high prices, mining companies are not ramping up production fast enough. Why? Because silver is typically a byproduct of mining other metals like copper, lead, and zinc. You cannot just mine more silver like you can drill more oil. Silver production is constrained by the economics of base metal mining. Meanwhile, industrial demand is accelerating. Solar panel installations are growing 20% annually worldwide. Electric vehicles require twice as much silver as traditional cars. 5G infrastructure build-out requires massive amounts of silver for circuit boards and antennas. Artificial intelligence data centers use silver in servers and cooling systems. This is not speculative investment demand. This is real-world technological demand that is not going away. Even if investment demand crashed to zero tomorrow, industrial demand alone would absorb most of global production. Let us look at what the smartest analysts in the world are saying right now. Not YouTube personalities, not random Twitter accounts. Actual billion-dollar investment banks with research teams and access to data we can only dream about. Citigroup expects silver to reach the high 70s in 2026. They called silver the trade of the year in their commodities outlook published in December. Their analysts specifically mentioned the supply-demand imbalance as unsustainable at lower prices. Bank of America went even further. Their strategists said silver could hit anywhere from $139 to $309 if certain conditions align. Now, those are extreme bullish scenarios, but the fact that a major bank is even discussing triple-digit silver tells you how much the landscape has changed. HSBC is calling for $88 as the upper end of their trading range in 2026. That is just $12 above current prices. If we hit that target by month end, that is a 15% gain in 3 weeks. Independent analysts like Jesse Colombo, who correctly predicted the 2008 financial crisis, is telling his followers not to worry about the index rebalancing. He says this is temporary technical selling and the fundamental bull case remains intact. His target? $100 by March. The Oregon Group, a natural resources investment firm, published a detailed report asking, can silver hit 150 in 2026? Their conclusion? It is not only possible, it is probable if supply constraints worsen and investment demand accelerates. Even conservative precious metals dealers are raising their forecasts. APMEX, one of the largest bullion dealers in America, told customers in a recent email that premiums on physical silver products remain elevated despite the price pullback. That means retail buyers are still competing for limited supply. So let us put this all together and map out what the next 2 weeks look like. Today is January 9th. The rebalancing selling continues through January 15th. That is 6 more days of potential downward pressure. During this window, expect volatility. We could see silver bounce between $74 and $80 as algorithms churn through the liquidation. January 15th is the key inflection point. That is when the mechanical selling ends. Professional traders will be watching volume and price action that day closely. If silver holds above $76 by the close on January 15th, that is an incredibly bullish signal. Then we enter the January 16th to 20th window. This is when the market digests what just happened and starts looking forward. Chinese buyers will likely become more active. Short covering could accelerate as bears realize the selling pressure is over. Technical traders will start positioning for the breakout above $80. January 20th is my line in the sand for the $80 breakout. Why that specific date? Because it gives the market 5 days after the rebalancing ends to find equilibrium. It is also exactly 10 days before Chinese New Year, when buying typically peaks. If silver breaks and holds $80 on or before January 20th, the next resistance level is $88. After that, $95. Then the psychological $100 level comes into play. Each of these levels will see profit taking and resistance, but the overall trend should remain up. Now, what if I'm wrong? What if silver breaks below $74? That would invalidate the bull flag pattern and suggest something more fundamentally bearish is happening. In that scenario, the next support is around $68, which is HSBC's 2026 average forecast. Even in a bearish scenario, I struggle to see silver falling below $65 given the supply fundamentals. Zoom out for a moment. Forget about the next 2 weeks. Let us talk about the next 2 years. Silver started 2025 at around $30 per ounce. It is now $77. That is a 157% gain in 12 months. In what world is that sustainable? Here is the answer. In a world where the fundamentals support it. This is not a speculative bubble like crypto in 2021. This is a commodities supercycle driven by technological transformation and supply constraints. The global transition to renewable energy requires massive amounts of silver. There is no substitute for silver in solar panels that matches its efficiency. Electric vehicle adoption is mandated by governments worldwide. 5G networks are being built in every developed nation. These are multi-decade trends, not 6-month hype cycles. Central banks are also playing a role. While they primarily buy gold, the gold to silver ratio affects silver prices indirectly. Right now, gold is trading around $4,400 per ounce. Silver is at $77. That is a ratio of roughly 57 to 1. Historically, that ratio averages around 65 to 1. If that ratio reverts to the mean and gold holds current levels, silver should be trading closer to $68. But if gold rallies, which many expect given geopolitical tensions, silver could follow proportionally. Inflation is another tailwind. Real inflation, not the government-reported numbers. Ordinary people see prices rising for food, energy, housing, healthcare. Precious metals are the traditional hedge against currency debasement. As more investors realize that cash is losing purchasing power, alternative stores of value become attractive. So here is where we are. Silver just experienced a violent but predictable sell-off due to index rebalancing. $13.6 billion of futures liquidation is creating temporary downward pressure. But that pressure ends on January 15th. After that, the path of least resistance is higher. China is preparing to ramp up purchases ahead of Chinese New Year. Supply is tight in London. Industrial demand is at record highs. Mining supply cannot keep pace. Major banks are raising price targets. Technical patterns are bullish. January 20th is the date I'm watching for the $80 breakout. If that level breaks with strong volume, we could see $90 by February and $100 by March. Conservative targets have silver averaging $68 to $88 for the full year 2026. This is not financial advice. I'm not a financial advisor. I'm simply analyzing publicly available data and sharing my interpretation. You need to do your own research and make your own decisions based on your personal financial situation and risk tolerance. But if you have been waiting for a pullback to enter the silver market, the next week might be your opportunity. Not because silver is going to zero, but because mechanical selling is creating a discount that disappears once the rebalancing is complete. The choice is yours. You can watch from the sidelines and wonder what if, or you can position yourself ahead of what could be one of the most explosive moves in commodity markets this decade. Do not forget to drop your city in the comments. I want to see where everyone is watching from. Hit that like button if this analysis helped you understand what is really happening in the silver market. Subscribe and turn on notifications because the next 2 weeks are going to be wild and I will be covering every major move. Thank you for watching. I will see you in the next one. Stay sharp out there.